Hello everyone, this is Evan here from the Trade Risk on Friday, September 15th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. Now, happy Friday to everybody. Hopefully you're doing well out there. You had a good week trading. It's been a rewarding week if you've been bullish, if you've been on the long side. Let's get into charts here with the S&P 500. First thing off the top, S&P 500, the SPY ETF. This is what we usually kind of track and analyze here for the S&P 500. This one ex-dividend here on Friday. That basically means that price is skewed. I think it was $1.23 if I'm not mistaken to the downside here. So this chart has this little artificial gap in here. If you want to smooth that out, take a look at where we really sort of closed in sort of the context of recent price action. You'll want to switch your charts over to the cash market if you're using TC2000, or if you can get your charting platform to adjust for those dividends, that would work as well. So we're going to look at the S&P 500, the cash market. See a wonderful close here at all-time highs, 2,500 on the dot. And if we go to the weekly chart, we can see here that we have emerged this week as a breakout week, two new all-time highs. We've been consolidating sideways since mid to late July. We sort of covered this initial stage of the breakout in our usual midweek video on Wednesday. This time, finally, though, we have the final closing price. We like to make sure we get those closing candles, and in this case, using a weekly candle, we want to make sure we did get that closing breakout high, and we did. 1.58% to the upside. Let's go back to the daily chart here. There's a lot to like for the bull case right now. The three sort of components to market health that I'm a fan of, which you probably know of already if you've been watching these videos for a while, is trend, momentum, and breadth. We can go through all of those right now. Trend on multiple time frames, on all time frames, is up. From the bottom left of your screen to the upper right of your screen, there is an uptrend on basically any time frame you look at. So that's bullish for me. Momentum this week has picked up to the upside. So again, from at least a sector component, there's going to be differences when you go back into individual sectors and stocks, right? Not everything is performing as wonderfully as we would like it to. But as a whole, looking at the market indices, we have momentum at our back now, particularly with this week's breakout, sort of a week one breakout as well. And then if you look at breadth, we have a new sort of rise of new 52-week highs. We have stocks participating. We have lots of sectors working out for us. So there's a lot to like in the bull case. That doesn't mean we can be a blind bull. It doesn't mean that it's easy to buy right now and just forget about things. This can clearly change. We could have some catalyst that sends this market in a spiral downward. And if we do see that, we will sort of correct and update our analysis. But at the time of recording this, using the evidence that we have in front of us, everything looks pretty good here on the upside. And I would still say that looking at this, even though once again, we are extending to, I think we're up over 11% now in the S&P 500 on year-to-date gains. I think this market is getting increasingly more difficult to stay long. I think being long at this point is still the harder trade for the majority of people. And I think we see it out there just from a sentiment basis that generally people are trying to fight this market. They don't think it can go up higher. At one point, they're probably right. They absolutely will be right. We will have a good correction at some point. But as of today, it is not that day. So I think that, this market looks good on some, evidence-based trend, momentum, breadth. I think sentiment is in the right spot for this market to sort of climb the wall of worry. I think you should always trade with stops. Have your risk measured, understand that this could flip very quickly, but until it does, again, I think that we should look at this market as constructive, and dips to me are opportunities. If we're looking at short-term lines in the sand, again, not far below us. So again, very tactical here, 24.83. That's only a few percent below us, 1 or 2% actually. So if we start to fall back below there, I will reduce sort of my enthusiasm on this market. But so long as we base up high like we finished today, 8 and 20 period accelerating higher, kind of indicative of that momentum, then I do like, I still like the bull case here below 24.80. back below the range from August or July, that would get me certainly to dial back some risk. And then I'm using the 2450 or so. That was last week's lows, this pivot, this reversal bar that we had on Tuesday. That would be sort of my next line in the sand. And then for the intermediate term, longer term holding participants, 2425 or so. I think that's generally the lows that coincide from August. So that's the way I'm looking at the S&P 500. If we go to the IWM, small caps continued their race higher here, 2.29% to the upside, moving very cleanly back into the channel, getting back up to the upper range here. Maybe we head back up and kind of get to this 145, 146 area, which would be the top end of this channel it's been in since 2016. And kind of retest these prior highs in here for the IWM. It is, again, moving nicely. Momentum's picking up here. So bulls have the wind behind their backs. So let's see if that continues into next week. The NASDAQ 100, maybe, kind of moving sideways a bit here towards the end of the week, but still, very, very tough to really nitpick this on anything but constructive. We're still hanging out near highs. If we saw the NASDAQ roll over here, that wouldn't be the most wonderful thing for this market in general. But again, we're still above a rising 8 and 20 period moving average. We're moving sideways. We're trying to lift out of this recent consolidation here. So really, this price action looks very, very sort of par for the course here for 2017, the way we've been kind of grinding higher, moving sideways. We got these jolts of down movement for 2 to 3%. Shakes people out, the market kind of consolidates, and then eventually pushes higher. So that's the landscape there for the market environment. Pretty much green lights all around. Again, know your time frame, know your strategy. That can change. I'm an active swing trader, so again, a big gap down on Monday. This will certainly change the analysis and some of the data that I use to construct the outlooks, and you want to pay attention to how you form your decisions and your trading strategy, so on and so forth. So that's the market environment. Let's get into some of the other major markets here. TLT, I still think, is in a pretty vulnerable spot here. It definitely did kind of hold in there and hang sideways here towards the end of the week. It still finished down minus 1.6%. It still has, it is still above a rising or a flattening, at least 8 and 20 period moving average that is bullishly aligned right now. So that is constructive, but I still want to be a little bit suspect here ever since we kind of had this high volume reversal off and a break of this trend line here, and now we're kind of hanging out underneath this 20 period moving average. I'm looking at this as a potential short setup, but nothing that I'm acting on just yet, but it's something to pay attention to. I think if we started to reclaim and get back above 128 or so, that might change the tune. Maybe this is some type of false move to the downside, but so far as, so long as we stay below 128, below this trend line here, I'd want to be a little bit careful and maybe lean to a tactical short trade in that. Nothing that I would try and hit a home run on, but I think you might be able to get another leg down there. So that's TLT. Go to gold next. Pulling back this week as well, 1.91% to the upside. You can see, though, unlike TLT, it's still kind of holding in trend here. It's had a big move throughout July. So I still think, as I sort of mentioned in the midweek video, this consolidation is healthy. Some basing out at this 20 period, maybe even a little bit further, is completely healthy. I think that is a dip or consolidation phase that I would be paying attention to see maybe if we could play some trend resumption back to the upside there. So GLD consolidating, keep an eye on it. Silver, basically the same thing. Those metals very much moving in harmony there. Oil had a very constructive week here as well, 5% to the upside, taking out last week's highs, getting back to the highs back from July, late July, early August. Yeah, right around this time here, right around 10 and a quarter. In the USO ETF, you can see just dancing, basically retesting that level right now. So I like USO here. This week has certainly kind of changed my tune on it. We mentioned the sort of bullish break last week when it broke above this trend line, but then it had this kind of very abrupt gap fill, and we said, well, let's keep an eye on it again. And now it's back to these highs. It's proved itself. It's held up. It's kind of put in a higher low here. So longer it can stay above 10, I like it. It's at resistance right now. So again, you want to pay attention to it, pick your spot accordingly. But I think there is a bit of a sort of at least near-term shift in sentiment in USO, and I think that's something worth paying attention to. No trade in that or position in it as of right now. Natural gas, talked about this week. This one had a nice week as well, 4.5% to the upside, completely gone without us as we got stopped out last week of this trade right here at the lows. So I have no position in this trade right now. We took that for a loss, and I am just watching this stabilize here. It couldn't quite close at the highs. You can see here the one real sort of dislike I have with UNG is we still have this kind of declining 8 and 20 period weekly moving average here. I dislike fighting that. I don't mind going in for a tactical quick trade, which is again what we were aiming for back here, which ended up being a longer trade that sort of dragged sideways. But long story short, I still like the potential in natural gas. I'd like to see it really above 680 or so, above last week's highs is more or less what I'd want to see. And we could get that as a trade signal again as early as next week. So I think it's something worth paying attention to. So that's natural gas, that's oil. We talked about gold. Let's move on to some of the sectors. There's really not a whole lot I want to talk about. I think semiconductors are pretty interesting again, moving back to highs here. Nice surge on Friday, 1.32% to the upside. Look at the volume coming back in again on these prior 2 days as it makes new highs. So the old leader back to reclaiming its throne here on the upside. So semiconductors, a bright spot for this market. Energy, we've sort of talked about this now. Also really starting to come back into favor here. It basically made a straight line shot from these year-to-date lows all the way back up to $67. So basically 5 points, very quick fashion here. And now it's starting to pull off. It had a down day here on Friday, but I'd pay attention to it, this type of move here, and the volume starting to come back in. Again, I think it's might not be the cleanest and easiest trade. If you look at the weekly chart, you can still see there's headwinds here, but you're starting to notice, even on the weekly chart, take a look at volume picking up just a little bit. So I think you're starting to see some more meaningful shifts here in energy. So it's something that I think could be a good opportunity for longs going forward. XLK, very similar to the NASDAQ 100. You could see flat here on Friday, but hanging up near highs. Something interesting there. Just kind of like the QQQ, but very resilient from a placement standpoint. Next to those all-time highs, that is constructive. Financials, I think, are interesting. We talked about how this had this kind of ugly breakdown last week, and it was really in the penalty box, and it was almost by itself in the penalty box because a lot of sectors were working, but we really saw kind of financials spiral down here. They found support at this 23.85 level, and now we're very quickly back to these recent highs here. And as we talked about financials last, I have this trend line drawn here, and it's not made to be an exact measure. Of course, you can see it's kind of cutting through a lot of price action, but this was support back here in July, and it's an area that I'm just wanting to see if the market can sort of hold back above it, and you can see it's just starting to do that now. Now you could kind of put that line up here where we failed at this kind of double top area in mid to late August. You could also note that the financials XLF started to break this downtrend line that it's in, and it's kind of hovering right above it. So I think what we may have got worried about or said to avoid down here really did kind of wash out, and I think it'd be interesting to see if financials can start to stabilize here. If we roll over and retest these lows, that's obviously not the ideal situation. What we want to see is a higher low get put in, or we want to see some sideways up here at prior resistance, and then maybe a move above that trend line. That would be interesting. If we go to the weekly chart, take a look here as we took out last week's highs. So that's kind of interesting there. Financials getting a nice sharp recovery after getting really beat up last week, but recovering a lot of it this week. So I think that's a notable reversal right there. That's sort of a week to take notice in the financials as far as I look at things. And finally, I guess I did have a lot to talk about in the sectors, is XBI, is IBB. I think this is a pretty interesting looking consolidation here. We're talking about this to subscribers, looking at a potential breakout trade or a little pullback breakout trade here, as it had this real sort of epic move from about $74 all the way up to $85, making new year-to-date highs. We had about a $10 move. Now it's moving very cleanly sideways here for 2 weeks now, letting these moving averages catch up, letting these overbought conditions sort of work themselves off. So this is something I'm paying attention to. You could look at XBI as well. This is the market cap weighted biotech index. You could look at LABU if you want some leverage behind it. So there's definitely a lot of options here, but I'd be paying attention to this biotech ETF one way or the other. I think this has got a pretty interesting formation heading into next week. So that's what I had for this week's video. I hope you guys enjoy the not a long weekend. Hope you guys enjoy your weekend. Thanks so much for watching. Don't forget to subscribe if you like these videos, and I will talk to you again hopefully very soon. Thanks.